Hello everyone. This is the pre-market report video for today 22nd February 2023 in the Indian stock market in terms of Nifty and Bank Nifty. Yesterday, Nifty opened a gap up of 60 points, but within the day for multiple times it gone down and gone up like crazy volatile and in the end closed near flat. However, the good thing here is that the volatility was within the band of plus 75 and minus 25. Please don't conclude that Nifty expiry created this volatility. It's not, it's the whole Asian market itself. European market was volatile till 4 p.m. Indian time. Since that's the time Putin completed the speech, then it's kind of stable. So the volatility was created by the global momentum rather than the local influence. Anyway, Nifty closed 0.1% negative and Sensex closed flat and Bank Nifty was just dropped by 0.07%. After some time, yesterday Bank Nifty outperformed the Nifty. PSU banks were the main dragger, decreased by over 1.5%, while the others such as pharma, auto, metal and IT indices lost around 0.5%. After two straight sessions, FIIs turns net buyer and DAs turns net seller. FIIs net bought shares worth approximately 525 crore rupees and DAs net sold shares worth approximately 235 crore rupees. Then after Indian market has, US market opened negative and continues to slide and closed significantly negative. There was an absolute all hell break moment in US market. Before their market opening, Home Depot, a largest home development company in the world, released the full year upcoming forecast. Basically, they issued the profit shrinkage warning due to the high supply chain cost and weak demand. This made the Home Depot stock to lose over 7% and made all three US major index to open negative. Then around 10 a.m. Eastern time, S&P Global released the projected PMI data for the February month. And the data comes as 50.2 compared to 46.8 in January month. Which means in January month, it contracted over 3% and for the first time in the last 8 months, the service sector expanded in the February month. So again, another economic data indicates the strong US resilient economy which pushed the market down and also it increases the 10-year treasury bond yield to near 4%. I hope you guys remember, only 10 days ago it was below 3.5%. Now it almost reached the 4%. Exactly at present it's trading around 3.96%. These all as a chain reaction pushed all three US major index down. Anyway, at the end of the day, Dow Jones lost 2.06%, S&P 500 down by 2% and Nasdaq decreased by 2.5%. Even US VIX increased by over 7% and moved near 23. Then regarding US tech stocks, all of them crashed. Tesla is the one that got hit most by over 5% and Facebook was the one that was least affected since they introduced the new revenue generating monthly subscription model like Twitter for the verification. All others such as Google, Apple, Netflix, Amazon all dropped by around 2 to 3%. Then regarding dollar index, it increased by around 0.5% and was traded over 104. About crude oil, it too dropped over 1% due to the interest rate hike fear. In terms of numbers, at the time of this video, WTI crude oil was trading near $76 per barrel and Brent crude oil was trading near $82.5 per barrel. Coming to Indian areas in US market, it's too really negative. Despite positive close in Indian market, both ICICI Bank and HDFC Bank closed around 1% negative. And it's same for IT stocks. Wipro and Infosys lost by 1.13% and 1.47% respectively. However, despite all these super duper negativity, SGX Nifty at 3 am Indian Standard Time, it closed at 17,791 mark. So based on equating the yesterday's close, I see it's indicating only 50 to 60 points gap down opening on Nifty. All three major index in US market closed over 2% down. 2% of Nifty will be equal to over 350 points, but the SGX Nifty is indicating only 60 points gap down. Some may wonder why. To answer that, I hope you guys know the investment firm called BlackRock. For those who don't know, they are the largest investment firm in the world with the assets under management of over 10 trillion US dollars. To compare, whole Indian GDP for FY 2023 will be around only 3.6 trillion US dollars and our whole NSE stock market's market cap itself was just 3.5 trillion US dollars. Thus, BlackRock's assets under management is more than 2 times of Indian economy and more than 2 times of whole Indian stock market. So if they release any statement, it carries huge weightage. Last night they released the statement they are overweight on US government bonds, mainly Chinese and also on the emerging stock market. And that's also a reason why all of a sudden 10-year Treasury bond yield was increased. So only SX Nifty didn't crash much. Moving on, yesterday rupee hits the fresh low. However, on the positive side, it's trading in the very narrow range. I mean, in 1 month at the money, the volatility hits the lowest level of 4.5%, whereas over-the-counter volatility comes as 2.2%. These are all very low volatility numbers and is considered as very good thing, since if there is no depreciation, then investors might feel confident investing in Indian market. Then about Reliance, oil price drop always will not favor Reliance, so it's negative. But there are some big brokerages such as JP Morgan, MK Global and Kotak increased the Reliance target price to near 3,000 rupees. I mean, they said they are overweight on it. As a summary, US market closed crazy negative. However, SX Nifty was not that crazy. Again, the worrying signs, banks and IT areas were down by over 1%. So, as per US market, Nifty has to drop over 350 points. Then as per ADR, it has to be down by over 150 to 200 points. But SX Nifty is indicating only 60 points gap down. It will be really interesting if Nifty trades positive despite all this negativity. Let's see. Now coming to technical. For Nifty and Bank Nifty on the daily charts, by combining last 3 days, it forms a bearish 3 outside down candle formation. Nifty alone forms yet another reasonable bearish candle with a negative divergence for the 4th straight session. It also forms a lower high and lower low for the 3rd straight session. But the good news is that it managed to take the support at 17,800. And also yesterday, for most of the time, it trades in the positive region. So there is a possible scenario if Nifty holds 17,700 in the next 2 days, it can bounce back. But breaking that can accelerate the selling. Then Bank Nifty forms a spinning top candle, but this time small bordered candle on the daily chart. So for the moment in candlestick, Bank Nifty turns sell to neutral and directionless. Here, please note there is no sign of bullish reversal, but there was an indication of momentary pause. Then coming to moving averages, regarding Nifty, the status is same as Monday closing. I mean, it's trading below 5, 10, 50 and 100-day moving averages. So as a moving average summary, it's a sell signal. However, in case of technical indicator summary, from strong buy signal, it turns now to neutral. Moving on, in Bank Nifty, there is no change compared to Monday closing. So as a summary, both moving average and technical indicator, it's a strong sell signal. From option change in open interest, it's weird. There was a significant both call option and put options unwinded at 18,000 and small number of new put options added at below 17,800 mark. I don't like to conclude anything based on this. So from overall options open interest data, 18,000 got the maximum call option open interest followed by 17,900 and because of that 18,000 is the strong resistance. On the downside, 17,500 got the maximum put option open interest followed by 17,600. So 17,600 is the immediate support. Breaking that, 17,500 can act as a good support. Then coming to Bank Nifty, based on change in open interest, significant quantities of both put options and call options were unwound at above 41,000 and maximum new call options were added at 41,000. So for the immediate resistance, just note significant new put options were also added at below 40,500. Then based on overall open interest data, the maximum put option open interest is present at 40,000. So 40,000 is the strong support to look out for. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the videos. It will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.